Thanks, Adam. Right, so we're going to be talking about some more indicators today, in particular the moving average convergence divergence. And as you might be able to tell, that's a bit of a mouthful. And if I say that about 30 times over the next 10 minutes, I'm going to lose my mind. So for everyone, it's called the MACD. First of all, just a quick disclaimer, all of this is for education and entertainment. Please don't go and start trading or investing based on what we're talking about here. This is just for you to learn. So last time in this series, we talked about moving averages. We talked about how they're constructed, and we talked about how we could make some trades based on the price of the stock interacting with the moving averages. And we also looked at how moving averages can interact with each other and how that can inform our investing and trading as well. What can we do with them further? Can we extract more information out of them? Well, I've got up here the 12 and the 26 moving average for a stock. It doesn't matter which one it is, but it is the FTSE 100, which is the equivalent of our S&P 500 in the UK market. Now, last time we looked primarily at the 20, the 50, the 100, and the 200 moving average because they're the standard ones. They're nice round numbers. Everyone looks at them. So why are we talking about these ones? Well, we'll get onto that. But first of all, I took a look at why they're these numbers, 12 and 26. And it turns out most people think it's because we used to have a 6-day work week. And that would mean there's about 26 working days in a month and 12 working days in a fortnight. So these numbers correspond essentially to the last 2 weeks of data and the last month of data. So we can use these like any other moving averages. We can look at their crossovers. We can look at which one's doing better. At the moment, you can see the purple one is above the blue one. So that's the 12 above the 26, which means that in the more recent term, the stock that it's tracking has been doing better. But can we make that a bit clearer on the graph? And the answer is yes. What we can do is subtract one from the other. So down here, we've got the first line, and this in itself is the MACD, or the first part of it. And all it's done is take the 12 and subtract the 26. And that gives us the data point at every day along the graph. So what does this show us? Well, when the MACD is high, it means there's a larger difference between the two. So the 12 is doing a lot better than the 26. And that means the stock recently has been doing a lot better. As the MACD starts to decline, we can see that these two averages are starting to come closer together. When the MACD crosses below the 0 and starts to go negative, we can see that the 12 is in fact below the 26. So that's cool. You know, it makes things a bit clearer. The MACD gives us some ideas of where maybe the two moving averages are coming closer, where crossovers might happen. That's all well and good. But we can kind of see that from the graph already, just looking at the moving averages. So can we start to extract more data from this? And the answer is yes. What happens if we take a moving average of the MACD? Well, now we can start to see further information. We can start to see how the MACD is doing in comparison to its past self. So when the MACD is above its own moving average, what that means is the momentum is increasing in the stock because the distance between the two is increasing. And when it crosses over, that's when the momentum is starting to change and the distance between the two moving averages is starting to decrease. So already we've got further information made more clear by building indicators on top of indicators. But that's not all we can do. We can extract this even further. What if we did this? Well, this looks a bit of a mess, so let's talk it through. This is what's known as the MACD histogram, and it's constructed by subtracting the signal line from the MACD. There's a lot of subtracting going on with this. So the actual indicators are not that hard to construct. What does this show us? Well, when the histogram is increasing in size, the distance between these two lines is also increasing, whether that's to the negative or to the positive. So that's again giving us further ahead looks at what might be happening within the MACD and therefore the underlying stock price. You can see that these tend to happen in peaks and troughs that correspond roughly, this histogram corresponds roughly to peaks and troughs in the MACD. So they're quite well aligned. That's a whole bunch of information just thrown at you. I've told you how these things are constructed, but that's not much use. What we should look at now is how they can be used in trading. The first thing we can look at is crossovers, and I don't mean the basketball type. We looked at crossovers with moving averages before. We looked at the golden cross, which is when a shorter moving average comes above a longer term moving average, and how that could be positive for the stock. Can we do the same thing with moving averages, with the MACD, excuse me? If you're paying attention, probably you're aware, yes, we can. So let's take a look. This is a stock chart showing Games Workshop and its price movements about 2 or 3 months ago. Let's say you were wanting to trade this. You've got a few moving averages lined up on the chart, but they're not showing you much. You've shown a support and a resistance area in the same way we talked about before. And what we can see here is that Games Workshop sold off sharply from a resistance area and has come down to the support area and bounced. Now, on its own, that looks pretty good. That looks like maybe it's set up to start moving back towards that resistance area. But is there further information we can take a look at that would give us more confidence in a potential investment or trade? The answer is yes. You can see at the bottom I've got the MACD lined up here. And we can look at that bullish crossover where the MACD is coming just above its signal line, that moving average of itself. So in conjunction with the fact that the stock has just bounced off a support level, that could give us some confidence to buy into it. And we can see in this instance that in fact it would have worked out perfectly. And you would have made a lot of money. Now, say we bought in at this point on Games Workshop based on the MACD crossing and the stock bouncing off a support level. Where do we sell? Well, ideally, we want to be selling up in this area here, because that's where the stock hit its resistance and sold off again. But you can't know that in the future. You can't know that ahead of time. You'd have been watching this come up to this area and going, is it going to break through resistance? Is it not? What should I do? So how can we choose when to sell? Well, we could look at the MACD again and look for the opposite crossover. We could look for where the blue line crosses under its red signal line. That would kind of work. You'd have made money, but it would have sold off in this red area here just after a huge drop. That's not ideal. So, is there some way we could have predicted a bit earlier? And the answer is yes. If we look at that histogram, we remember that that shows us when the momentum is starting to shift in the MACD, when they're starting to come closer to its signal line. So that can show a reduction in momentum. Now, that can be used to predict this crossover. And if we'd followed this reduction in the histogram, we'd have actually ended up selling in this area here and making a lot more money than if we'd sold down here. So that's how we could use the histogram. We could also look at something like a divergence. Now, divergences crop up a lot in technical analysis in general, and they can apply to any number of different things. Stock charts, you can look against the stock against its index. You could look at the US dollar against the S&P 500. You could pick any number of markets and look for divergences. But we're going to look here at the stock price against the MACD. And what we can see here, we're looking at the FTSE 100 again. The FTSE 100 made a high here, pulled back, started to climb again, and made another obvious high before pulling back. Okay, we want to know where it's going next. Well, at the same time as it was making these highs on the stock price, it was making peaks on the MACD. And you can see they line up pretty much perfectly with those peaks. That's due to how the MACD is constructed. But what we can see here is where the stock made a high and then a higher high, the MACD at the same time made a high, followed by a lower high. And that's what's known as a divergence. You can see this line slanting up and this one slanting down. Now, this isn't a particularly reliable indicator in and of itself, but it can be used in conjunction with other information from the stock, from the market economy as a whole, to inform your trade that maybe this momentum is going to shift and the FTSE 100 in this case is starting to come down. Now, the FTSE 100 is actually dropping because of inflation fears, so which way it goes is probably going to mostly rely on that rather than any technical analysis, but it's still worth knowing. So, we've now looked at quite a lot of technical analysis and indicators. We've looked at how to read charts with candlesticks from Panos. We looked at support and resistance and how we can use that to form trades. We've looked at moving averages, and now we've looked at the MACD. The point I want to make about all of these different tools is that they shouldn't be used on their own. All of these can work in conjunction with each other to help predict where a stock is going to go and help you make the best investments and the best trades that you can possibly do. As with all of these things, none of them are 100%, so you should always be aware of your risk management and know where you're getting out of a position, if at all. Does anyone have any questions about that? Anything that wasn't clear?
Hi there. Thank you so much for watching our video. I hope you really enjoyed it, and I hope you learned something. If you have any questions, please let us know in the comment box, and don't forget to like and subscribe so you can learn more about our channel. Thank you very much, and see you next time.